Hey everybody, good morning. Looks like a big crowd today. Michael, George, Merle, Francois, Larry, Valerie, Sergio, Alan, Mary, PD, Brian, Rungemer, Arturo, Goose, my man, Lieutenant Colonel Goose in the house, Andrew, George, Harry, Craig, Michael, Suckbear. Hey everybody, good morning. William, and William, to answer your question, as far as if Bitcoin goes lower, Mara's going down, baby. Um, when you hold when most of your company value is in holding like 12,000 bitcoins, watch out. I don't know. Maybe it's 5,000. I don't know. They hold a lot of value in bitcoins, and that's their primary business is mining bitcoin. So if Bitcoin goes down, I mean, this is one of those duh type of situations. Look at the underlying value of the company. It's contained in the Bitcoin chart. So anyway, um, not a recommendation to buy or sell anything now. Hey, CPI coming in hot. Who could have guessed? Who might have said that yesterday? I don't know. Huh? Anyway, yeah, I don't think it's gonna let up either. I think we're, um, big picture, probably going into. I mean, we're in the second act of this inflation play. Third act is going to be crazy. If this plays out like it did in the '70s, we're going to see 18% interest. I mean, we're we're set up. Golly, allergies still get me. We're set up on the path. We are on the path to higher inflation. Let me see if I don't know if I even have that charts up still. Let me see. I don't remember. Popping through a few of my charts. Let's see. I have all sorts of stuff still up that we've talked about in the past few weeks. I'm looking for my. Well, I know I can find it on Discord because I've got that saved. Now I just have to find Discord. Give me one moment. There's Discord. And in my stuff for videos file. And right here it is. Open. Pull it out. Oh, I pulled it onto a different bar. I need to pull it out here where I can drag it over. And then I need to share it. And zoom it up. Like this was back when we had 7.7. This is not today's. This is from I don't remember. A little while ago. And I recreated this chart a few weeks ago, and we're probably in this zone. Right, we've got the all clear. Everybody's it's all clear, right? Fed's all clear. Stop raising rates, but we haven't dropped in the core CPI. We haven't dropped below 7%. I mean 4%. Excuse me, 4%. We haven't dropped below 4% yet. And target's what 2%. I think we got this premature all clear. We're actually hanging out right here. We're getting into the. This is starting in May 2020, right here. We're rocking along, rocking along. But look, if we get into this period, all right, this is indexed to 100. This is upwards of 250. All right, this means everything you know, starting in May 2020, everything you know, cost wise, think of it being 2.5 times more expensive. And 2.5 times more expensive. It's like your, you know, baseline car. I don't know, $30,000. All of a sudden, do the math on 2.5 times more expensive. I mean, we're talking $75,000 for a starting car. Starting car, lower end, $30,000. I mean, some might say $20,000 starting car. Okay, if we're talking $50,000. Your $20,000 car. Talking like gasoline right now. It was what? $2, $2.50. I mean, kind of banged around there back in May 2020. Talking the base, the low price, 2.5 times more expensive. Everything, 2.5 times more expensive. Houses, 2.5 times more expensive. If this thing plays out. And so far, we're just kind of tracking right along. So this is one of those kind of scary charts, right? We're talking about, this is months on the bottom. Goose says, most of his little bitty subscriptions for things have doubled already. I mean, we're talking about 2.5 times, doubling again. I mean, all the way out here, 155 months, 160 months from the start. So this is like 10 years. So we're looking at 2020, so 2030, and then 5 more years, so 2035 is what we're looking at right here. If this thing kind of plays out the way it did before. So we could be in this transitionary period for the next couple years, out to 72 months. We're crossing, we've crossed 36. Think about it, May 2020. So June, July, August, September, October. So we're sitting at, 41 months. So like I said, right in here. And the inflation's not going away, right? We're just going to keep on chugging. Everybody thinks, oh, we tamed it. We got rid of the spike, right? It's all clear. It's all clear. Then it ramps again. So, yeah, be careful on your long-term plans. We could go into the Greater Depression that I was talking about, like in this area. See, rocking inflation while, the rocking inflation could be what causes this whole thing. So, the moral hazard of raising interest rates and then printing a bunch of money to be able to afford the debt that you just refinanced. Janet Yellen come out yesterday saying that she expected long-term Treasury interest rates to be at 1%. I don't know what she's looking at. That's not what we're looking at right now. So, yeah, I don't think Kimberly's on here this morning, though, Philip. Morning, everybody. If you want to chat with me like all the fine folks there, all you got to do, hit the button right down here. Oh, my monster can. Right there. There we go. Monster. Right there, the green overlay. Hit that button, become a subscriber. A few seconds later, you're able to chat while I'm live. Now, if I'm no longer live, you'll have to leave a comment down below. And if there's anything I say today that you agree, disagree with, give me a thumbs up or down or whatever. I appreciate the thumbs up, but just interacting with the video actually makes YouTube, or gets YouTube to pay attention. And leaving a comment helps. Chatting on the live stream helps. And sharing it with other people helps a lot, because then maybe I get to help somebody else. So, alrighty. That was it's kind of a scary chart, when you think about it. When you really sit there and think about what could happen in the next 12 years, we could be staring down the face of some wicked inflation. So, just want everybody to be aware that that's kind of hanging out there. Now, all trading involves a substantial risk of loss. All right, anything I talk about, be careful. Make sure you agree before you put your money on it. Don't just be like, well, JT said blah blah blah, so I'm going to put money on it. You know what? Past performance is not necessarily indicative of future results. I may be wrong. I may never get another one right again. That's that'd be a bummer, because I've worked really hard to figure out this skill so I can actually predict stuff in the markets. But it may break tomorrow and I never get it right again. This presentation, informational, educational, fun, and entertaining. Hopefully entertaining. That's why you're here, right? Kind of entertaining. It's like watching Jimmy Cramer, except that I actually help you try to get ahead of stuff instead of just telling you to buy, or sell. Anyway, it's not a recommendation to buy or sell any financial instrument, all right? Don't buy stocks, don't buy options, don't buy futures, don't buy Forex, don't buy cryptos, don't buy any of that stuff. Don't sell them either. Don't short them. I mean, just be careful. All right. Nobody's going to look out for your money like you do. And if you desire personal financial advice, make sure you hire and consult a financial advisor who has a fiduciary duty to give you advice based on your financial situation. All right. Appreciate all the love in the chat there. Love it. Love it. All right. Moving on. Where did my calendar go? Let's refresh this to get today's CPI print and zoom it around here. Core CPI came in at the expectation. The problem here, this month over month came in at 0.4 and year over year came at 3.7 with the core still above 4. The core year over year at 4. They don't have it on this chart, unfortunately. Coming in hot. So, I don't know. That's not what the narrative says. The narrative is like, oh, it's all under control, right? Like, no need to worry about it anymore. This reminds me of the transitory thing. Be careful, all right? Careful who you listen to. This guy trying to help you. I don't know about everybody else. It's my whole mission in this thing is to try to help people just like you not get taken by the market, not get taken by all the mainstream media bullcrap. So, yeah, calling out throwing some shade on the mainstream media. Yeah, I mean, that's my whole goal, right? I want to help more people, and to help more people, I need more people to watch me. So, I mean, that's the whole game here. So, anyway, there's your CPI, and we've got coming up tomorrow. Looking forward, I always got to look at what's coming down the road, right? What's coming up next? Consumer sentiment, preliminary, and inflation expectations. Right? This is kind of funny, you know. The predicted inflation expectations right there, 3.2%, when we just got the CPI print at 3.7. So we'll see how this comes out. But energy is kind of a sore spot, you know. And if we get that next run in oil, inflation's not going away. You know, the cost of oil being higher trickles through the whole economy. All right. We can say, you know, we're going on to green infrastructure, whatever. But at this point, we don't have the Tesla trucks delivering, so we're not using electricity. And even the majority of our electricity is still generated using traditional fossil fuel type things. So the cost of oil being higher trickles through everything. Be careful out there, all right? That's the bottom line. Be careful who you're believing, what you're believing. I almost can't believe that we keep listening to this crap. Anyway, 9:30, market's open. I haven't even gotten to a single chart yet. So anyway, this chart, S&P 500, the simple, just looking at the closes. We're coming up. Didn't quite make it to the key resistance yet. We're still getting a little green on the open, up 5, despite the pullback. And if you don't even know what pullback I'm talking about, let's hop over to futures real quick and look at this. Look at what happened on CPI right here. Look at this. That's what happened. CPI hit right down to the 15-minute roadmap line. Getting a little pullback. We may see this gap close all the way up. Russell probably going to close the gap before I can even do anything about it this morning for opening bell alerts. Right there you go. All right. Getting a little negative reaction because, oh gosh, they're going to have to raise rates more to get this inflation under control. Man, I got news for you. The rates don't matter. All right. And as I've been speculating since back here in January, we probably go sideways for a little bit and then see the rates pick up again and rocket higher. So if you haven't seen this chart before, welcome to the party. The blue line is the market rate. The orange line is the Fed funds rate. All right. And I'm kind of speculating that we see it rocket way on up here. Possibly 9, possibly much higher. I mean, we could get up into the double digits. Now, what's important about this? Right now we're inverted. All right. The blue line is below the Fed funds rate. That's the going market rate below the Fed funds rate, or the 2-year Treasury. Now, every time in the past that we've done this, at least in the modern times, starting, I'm going to start with the late 90s. That's when I started trading. Every time we kind of cross this at a peak, we've had a financial crisis of some sort, including right here, the rates crisis in 2018, December, November, December, when we dropped to ZIRP, zero interest rate policy. We had some ZIRP back here, kind of spiked it up and came right back down. Now, this may be an intermediate on the way up to the ultimate high, and we may be higher than I've ever seen it go. When I first started trading back here, we plummeted out on the back of the dot-com crisis, ramped up into the housing crisis, and plummeted again. And then we had this rates freak out. The Fed attempted to try to ease up on their balance sheet and ease up on the QE and all that stuff, and right back down. And funny enough, that corresponds with COVID right there. Now we've ramped up again, fastest rate in history. We've never raised rates this fast. I think it's only a matter of time before we see yet another financial crisis. Look, right there in 1987. It's one to keep an eye on. You want to recreate this yourself? DGS2 on TradingView. It's the 2-year constant maturity rate. And then Fed funds is the other ticker, FED, FUNDS. Right there. You can see it right there up on the screen above me there. All right. That's it. It's a weekly chart. So, all right. Welcome, everybody. Everybody having a good time so far this morning? Aren't I just a cherry of good information? Positive, happy. Anyway, I want to see this 15-minute ES chart hold here. It does run a little behind. So we're seeing S&P actually come back a little bit, closing the gap there from yesterday. Yesterday, got that little doji. Today, popping a drop. Can we break out higher than we were just a few days ago? Right here. Can we do it? Can we do it? Can we do it? That's what I want to see, right? I want to see this break higher, not just make a lower low and drop out. So that's a 15-minute right there for you. You notice on ES, we're hanging out on the roadmap line, but on the SPX, where we don't have overnight data, we're just hanging out up here. So these charts do follow different paths. That's why I look at all of them, both of them. Is there any good news? The good news is we're up here. All right. Can this be the bottom of this correction? Sure as shoot it can. Now, what I want to see is not break below yesterday's low. All right, this breaking out above yesterday's high, positive. This breaking out above a couple days ago high on the 10th, extra positive. Had some move on up. Now, what we might do is we might retrace a little lower. This might be the point where I was talking about before. We come up here and we do a 618 retrace. So we might be at that point right now. We might. Right here. We might come back down to the roadmap line. This might be that roadmap line retrace I've been kind of talking about a little bit. All right. Does it have to happen today? No. Could we pop up into the key resistance first? Yeah, we could. Just stay frosty. All right. Gotta be nimble. Gotta be quick. Gotta keep track of what's happening here. I mentioned several days now that we might see that double dip. It happens almost all the time where we get the low down in the single digits, we pop up, and we dip again. So we are likely to see something dip at least to the 20 on the S5FI. That's your S&P 500 stocks above the 50-day moving average. we're likely to get a double dip here and then get the real big move up. Now, can we just continue higher at this point? Sure, we could. History says we'll typically see a double dip, and the chart pattern usually shows that we have a double dip. So just watch out, all right? Just watch out. Nobody's going to protect your money like you do. You can see we're a ways off the highs that we've had this year. Once we get above that key resistance on the simple chart, I keep bouncing between charts, but the point is, it all comes down to this simplified chart right here. We get above the key resistance, game on for a higher high into the end of the year. As long as we're below the key resistance, we can chop around and fart around and mess around, and it's that's the way it is, all right? So, know your path, know when you're wrong. I mean, it's not about being wrong that costs you the money, right? I mean, I say this all the time. It's not being wrong that costs you the money. It's staying wrong. Like if you're like, we're going bullish, and then we break down and we start making lower lows, close it, because I'm probably wrong, right? But we got to get above this key resistance to go higher, and it's not really a confirmed bullish trend until we start making higher highs. We got to get above the key resistance as the first point. Then we got to make higher highs and higher highs, and by the time we finally confirm it, it happened. So this is one of those where there's no big gains in the market without taking risk. That's part of the whole game, all right? Is there any sure bet? No, there's never a sure bet in the stock market. Otherwise, you're not going to make any money. It's just the fact of the life, fact of the game that we're playing. So anyway, NQ, NASDAQ. This is what I see right now. We've got to clear that downtrend of highs. Could we take one more trip down? We could. I want to see this break out, break through this consolidation here. It's that simple at this point for NASDAQ. You may be like, NQ, I've never heard of NQ. It's the NASDAQ futures. Divide these prices by 41, and you get QQQ's price, roughly. All right? INDX, I mean, I don't typically look at the indexes because they leave gaps overnight. I like the futures because they show me the complete price action picture. Now, sometimes they can muck up the pattern a little bit, and the cash index clears it up. So you have to be a little flexible and use all the information that you possibly can. Now, Russell right here. I was concerned about this yesterday. We came up, hit the top of the box for 3 days now, including today so far, unable to break out. If we can get back above about 1820 on Russell, that can set us on the path higher. If you've never looked at the Russell futures or the Russell index before, IWM is the ticker that goes with the ETF. S&P 500 is SPY, NASDAQ is QQQ, and Russell is IWM. And this is your small caps. We need the small caps to start participating to support this bigger rally. Can we rally without it? Sure, we could. Is it much more likely to blast off higher with the support of small caps? You betcha. All right. So they have been kind of lagging since right here in July, coming back right to the lows where we, consolidated back here in March when the banking crisis thing hit. And that's not all clear yet either. So please be careful. Please, please, please. All right. This was like a rotation out of small caps, and we may see rotation back into small caps. And another thing that we got hit pretty hard the last few weeks, the utilities. And see, we're already seeing that rotation back into utilities, Goose, right there. I was talking about it with you yesterday. We're already seeing that rotation back into utilities. Now, can they get bullish? I don't know. Is this still bearish? Yeah, it's still pretty bearish. Could it go lower? Sure as shoot it can. But, we had the rotation back into oil. We saw that starting, really, just pull up the oil chart. We saw it starting right back here in June. went in heavy, came up, hit that target. We've come back and bounced off the roadmap line kind of. Today, maybe that higher low that I was looking for, and we may be launching off here. I am still long. Yesterday didn't freak me out. A few people were like, oh my gosh, what's going on? I only bought one contract when we popped up here. Riding it down, and when we get confirmation that this is the bottom, I'm going to be probably adding at least another one, at least doubling my position. But this was a 786 retrace of that initial pop, holding, and a popular way I look at this on a 30-minute chart. Let's kind of zoom this up a little bit tighter so we can see it here. Here we go. Here we go. Nice view. All right. Those lows right there. That high right there. Clean it up just a little bit. We came down, did that 786 retrace. This qualifies as my measured bounce setup. All right. When we break above this high right here, which is, we've just done it, that sets us up to go higher, significantly higher. Now, can it still fail? Yeah, it can still fail. All right. But I'll be looking to potentially add another UCO contract, if not more exposure to this, and especially as we break higher than this high that we had right here. All right, so oil looking like we might go on another run, and supports inflation continuing to be sticky and problematic and higher. GC on the daily, still working on that reversal, still working on proving it to us. Got to break above the lows from back here. That's going to be a resistance point. We can turn down and go lower yet again. And so far, that doji hammer, inverted hammer, croquet hammer thing, whatever you want to call it, indicating some resistance. That's kind of what I thought we would see. We've got to get back above all this crap to go higher. Of course, the duh makes sense, but there's obviously a supply right here, supply of sellers. And if we can absorb that supply, get it back above the roadmap line, then we can start talking about actual higher prices on gold. And that's GLD and SLV kind of going with it. But we may see a retrace. And if we hold a 618 or 76.50, that measured bounce type setup, turn back higher again, similar to what I was just talking about on oil, that's going to be game on, because that would indicate that this is probably the bottom in gold. Now, Bitcoin got below the roadmap line yesterday on the futures, showing a little green so far today. Can it hold that? I don't know. I was concerned that if we get below that, it may be the first indication. Then we have the second line of support right down here. And I need to fix that back up. Yeah. If we get below that 618, certainly below the 786, it really tips the odds to going lower on Bitcoin. That takes down all the miners, all the everything with it. You want to know about the miners, you want to know about anything that holds, trades, operates with large amounts of Bitcoin. MicroStrategy, Mara, BTBT, Hut, Riot, BitX, BITO, BitQ, all the Bitcoin crypto-based stuff right there. This chart, and certainly the spot market, if you're not paying attention to these charts, you're doing yourself a disservice. All right? We're already in the danger zone for going lower. Like, this is the danger zone. If we don't get back above this right here very quickly, it is highly likely that we're going to go revisit the lows from back here in June. And it's also, we visited those lows in September. That's what the price action is showing. That was a 3-wave retrace. And I warned a few days ago, this thing was proportional right here at a point where we rejected the 100%. That's lower high right there was another confirmation that we may be in for a deeper continuation lower. We'll probably make a lower low than what we made back here in June if this doesn't just reverse right here. All right. We're already getting below. You make an uptrend of those first two lows. We're getting below it. This is a critical point. If we don't just reverse this back higher, we are probably going down here to the 24, 25,000, if not pushing lower. Pushing lower could look something like this at this point. Draw the fib line. Down here, 24, possibly 22,000 on Bitcoin. All right, any questions? I know it's a bummer, but the major catalysts are still months away. The SEC punted all the approvals for ETFs out to January at this point. The halving event is out in April at this point. We've got a quarter of 3 months of time where we're kind of devoid of catalysts. Can we just drift lower? We can. All right. It's more waiting game. Now, Ethereum may do the flush out. We may hit that target finally. Had that target on there for a few months, and we're back to the lows from September already. One more flash down could be the thing that crypto's waiting for. Could be the thing. Dollar, I thought we might reverse off that area. Probably heading to 108. Probably heading to 108. FSLR. Let me make sure that this is the current list for today. Yeah. FSLR right there. Potential reversal, but again, we don't have anything solid till we get above the roadmap line. ALB, a lithium play, but it's been pretty horrible. Bounced up to the 100. The next move, classic market roadmap pattern. We hit the 1272. We bounce back up to the 100, and then we get the extension to the 1618. It's an upside down market roadmap pattern. Usually I'm looking at it going higher. This one set up for going lower. TGT. Oh man, look at that. Came up a little shy of the 1618. Didn't do the bounce back up to the 100. I mean, can it form the reversal out of this zone? Yeah, it can. Am I going to wait for it to be above the roadmap line before I put any position on this thing? Probably. This thing can still dumpster fire and go lower. This chart is a dumpster fire, not the company. I'm not saying the company is a dumpster fire. All right, just saying this chart. Be careful. It's like light. Trying to catch this knife drop is like lighting your money on fire. VSAT looks a lot the same. I wouldn't touch it. I don't care what kind of pop they're getting today. FAST, Fastenal, that's pretty nice. Target's right up here, 66. It looks like it's on the way. That's as far as a roadmap line pattern goes. That's 60, 62, but then I have the bigger confluence of patterns and stuff up here around 65, 66. We'll see if that one gets up there. If you have no idea what they sell fasteners, like nails and screws and construction things. Sony right here. Stuck below the roadmap line. That could be all of this correction. It could. Don't know for sure whether it is or not. We're at the roadmap line. We need to be back above this resistance right here to take along, potentially at the 106, 110, 114, 119. We'll see what happens. All right. I think this one's probably void since we went lower low than this low right here at this point. So really 106, 114 is probably the upside if we get above this 95 area. CVX, just kind of chopping on the roadmap line. We've got the bigger correction pattern. We're going to have to get higher high. So far, that's a lower high, a retrace, and a lower high, and a retrace. But we're holding higher lows. That's the positive here. Got to get above here. Target would be like 198 up there if we can break above all this stuff. OPGN, that's a nice initial indicator. This might be something to watch. This is under $10, low price stuff. Doesn't always follow patterns. Careful. All right. Stuff under 10 can just go a little crazy on us. And this was a reverse split over here. That's usually not bullish. This could just be a little short squeeze thing, and we end up lower. So this one's on the danger list. All right, it's playing with gasoline list. SECO, another dumpster fire, looking for a bottom pop, reverse split, I'm sure. Yep, 10 for 1. I mean, all these things look the same. It's pretty dangerous. We're right back up into that actually pre-split resistance right there. But watch out, all right? Watch out, watch out. I mean, post reverse split, this thing went to 20 cents and now it's at $2. That's some dangerous stuff right there. I don't like to play with that kind of stuff. I just don't. SQM, could this be the bottom? It very well could. This is a potential measured bounce. Potential measured bounce. Right back to the 618. If we break back up through the roadmap line, it'd be an entry. And this thing could go quite a ways up. Quite a ways. Maybe like JT. How, what do you mean quite a ways? Like 15 was the low. 113 was the high. We're holding the 618. That sets this thing potentially on a path to like 4 to 600 up here. Like, wow, yeah. Yeah, wow. That could be worth buying a few shares and holding them. This could take years to do. All right. This took years to do. This could take years to do. Maybe worth holding a few shares. I mean, it's like a 5 to 6x maybe. And if you break down below the orange box, you just liquidate. You know, so risk like $10 to potentially make 6 times your money. I mean, that's my kind of plays. DVA. I'm not saying to buy it. It's not a recommendation to buy or sell anything. DVA, gnarly. If we close down here, looks like we're probably going to get an extension lower down to 52. Potential market roadmap pattern down. AMR, getting slammed a little. That's coal. Like I said, I mean, hey, coal industry, horrible, right? Look at that run. It's the CPI. Can't remember that. BTU. There it is. Remember the name, but I mean, it's been pretty strong. Potentially breaking out right here. So looks like coal might not be a bad play. We might get a little retrace, might go a little deeper. That could be a head and shoulders right there. We could see a deeper retrace. See it right here. Shoulder, head, shoulder, breakdown. Could go down to this 215, 220. Oh, look, it's right where it consolidated before. Imagine that. We may retrace back to here before we get the next extension. And that would probably be, looks like, an echo. Oh, yeah. God, you couldn't. So these little moves right here, it's like an echo in the market. You see that right there, that right there. These ones over here, right there. That one over there. That's like an echo. That's like the standard size pullback this stock likes to do. Back in this 215 area. Find support here. Go on the next run. DPZ. It was down pre-market. Now it's up 11. That's pretty nice. I bought 2 shares yesterday afternoon just because this correction looked like it was done and it looked like we might rocket higher. I'll probably close them out up here around 400 maybe. I'm not sure. This is one of those, I was throwing the dice, bought 2 shares, $700. Yeah, it was kind of pricey. And yeah, 430, 458 if this thing can break back above this consolidation right here. That was an earnings Announcement today, beating on the top, missing on the bottom, selling $1 billion worth of pizza. That's a lot of pizza. TPST, Biotech Pharma, be careful on that one. INMD, another medical specialty biotech thing. Be careful on that one. Hanging out at the lows. Breaking down even lower. If we don't hold that, I mean, this looks like we're going lower. This looks like we're going lower. 13. CMC, and that looks like potentially going lower too. So it's not all rosy clear for like metals and stuff like that. I mean, X was ramping yesterday. Trying to get out of here. Trying to get to that 34 target. Getting a little retrace today. May come back to the roadmap line. So could break out. That is a resistance point. And you can see it's been chugging. Trying to get out of the top of this box. It may spike up. Could go for a new high too. RMD. Looks like we're going on down. A little retrace and extension lower. How low can she go? Way on down, unfortunately. Be careful. COVID lows are still down here around 110. They're $30 down. This big consolidation before the COVID lows, hanging out down in the 87 to 100 area. Below that, not looking too bueno. No bueno. So be careful on trying to chase a bottom. That is a biotech medical thing also. And it's suffering because of the GLP-1 popularity. And then Carvana, making a morning movers a little bit, potentially bouncing off the roadmap line here. Potentially right in the target. Imagine that. You'd think I knew how to do this. Got lucky again. If you listen to me, got lucky again. Then this one is a dumpster fire of a company. The chart looks pretty positive. We can make money off this chart. All right. Just keep it in perspective, what you're doing. Probably going to retrace fully to the roadmap line. Then when we break back above like 48, we could be set for 63 and 72 on the upside. If we start breaking down below like the roadmap line, watch out. We could get a deeper retrace and come all the way back down to 3. Just know what you're doing. It's not about being wrong. It's about staying wrong. That'll cost you the money. Don't stay long in the face of information that we're going lower. This is going to be a key support zone right there around the 618. We start getting below that. Watch out below, baby. Watch out below. All right. Bias for the day. Bias for the day. Looks like we're getting that retrace a little bit. Be careful is my bias for the day. Still trying to work through that orange box right there. That's the gap. Haven't been able to fill it yet. Rejected once, twice, 3 times, my lady, so far. Can we hold this little support zone here? You know, we had that strong buying yesterday. Creates support right below us. So we're kind of stuck in between here. Can we hold that support and push up to the upper end of the resistance? Are we going to do that today? Or are we just going to churn here? Or are we going to come all the way back down to the roadmap line? We start getting below the bottom of the support, roadmap line. We start turning higher, top of the resistance. All right. Make sure you smash the like button if anything I said was handy, useful, you know, whatever. And I'll see you again tomorrow for another Morning Monster, where I'll go through whatever's moving, try to find a bias for the day. Be careful out there. Nobody is watching out for your money like you are. All right. The account you save may be your own. Have a great day, everybody. I'll be in Discord. Link is in the description. It's like $5. You get the market roadmap line, which is this orange line right here. My orange support resistance line, like $5. I'll see you later. I actually got invited to be on a podcast. I got that interview coming up later today. And It'll be like 2 months before they post it. So I'll make sure and let y'all know when they're going to post it. Have a great day, everybody.